Well, it is that time of year once again when everyone realizes there are two sure things in life. One of them is taxes. Let's not talk about the other one. Taxes are depressing enough. All right, we've been very fortunate to have Steve Sexton, president of the Sexton Advisory Group, providing us all with some great financial advice for the past several months in our Money Minute segments. Steve's back today to talk about some strategies and how to avoid the common mistakes when getting ready to pay your taxes. It's good to see you.
Good to see you too, Mark.
Okay, so I'm always hitting you up during the breaks for free information here on tax strategy and so forth. Let's share it with everybody today.
Okay. One of the things we do in our office is we review everybody's taxes after they get them done. And what I'm coming to you is the main four things that people are missing. Number one, there's a tax credit for working this year. If you make less than $150,000 a year, you can get a $300 or $400 tax credit.
Just for working?
Yeah. Isn't that great?
Wow.
Now,
okay.
Now, the funny thing about that is there's a lot of seniors that have small little part-time jobs, and they're entitled to it as well, and they're missing it.
Okay.
Yeah.
So I guess maybe the overall tip there is, number one, you should thoroughly review your returns after they're done to make sure you haven't missed anything. And that would be one of the number one things that you've noticed.
That's one.
Okay.
The other thing is to make sure whoever's doing your taxes knows about these things. The next thing is this. A lot of people, they have kids going to college, they've got nephews going to college, they got grandkids going to college, and they're helping them out. And they're paying that tuition.
Right.
This year they can get up to a $1,000 tax credit just for doing that. And we've seen this, about 30% of the time of the people that we've...
Well, now, my son will be going to college next year. Mm-hmm. Okay, so I guess within this tax year, I'll have some college expenses.
Yep.
And so forth. So just tuition?
Yeah.
Just if I'm paying tuition?
Yep, as long as it's accredited university.
Well, I'm not sure where he's going to go yet. Basket weaving school or what? I'm not sure, but it has to be accredited. Okay.
As long as it's the underwater basket weaving school, we're good.
Okay. Good. All right. So college, I was just talking to my mom about this the other day, and I think I gave her bad information. I said, gee, I don't think college tuition is deductible. It's not deductible, per se.
Actually, there's many things you can do with college education. There's many private universities have an 891 program is what it's called, and that will enable people like your mom that would want to help out your son for college, and they allow them to create a deduction, give the university deduction, but have it utilized for his tuition. And that way she gets a tax deduction.
Okay, now that's very interesting. I'm going to jot that one down. That's called an 891.
So
if you've got kids that are headed off to college, you can encourage Grandma and Grandpa to donate to the kids' education.
Through the university.
Through the university. They'll get a deduction, and your child gets the benefit of the tuition reduction.
That's correct.
Now, is it a one-for-one? If you donate, if you put $1 into that plan, do you get $1 off your tuition?
You're donating into a foundation that enables her to get a $1-for-dollar deduction.
Wow.
Not all universities have this. So most state universities do not. It's mostly private universities that do.
Okay, I just jotted that one down because that's huge.
People can use a charitable remainder trust to do the exact same thing. It just costs a little bit more money.
Okay, very good. All right, what about this alternative minimum tax?
Okay, many people pay alternative minimum tax, and they had to do that in 09, 08, 07, 06. If they're not paying it or paying a reduced amount, you can get a tax credit for the money you spent in an alternative minimum tax. I have one client. Her taxes went way up last year, and she had $2,300 in alternative minimum tax. This year, she's not going to have that, so she's going to be able to get a credit for the stuff she spent last year.
Okay. Well, this shouldn't happen to somebody that's supposed to be interviewing somebody, but I'm taking notes furiously during this segment because the tips are coming at me so fast and furious here. If folks want to get in touch with you and they want to go over some of this stuff, are you booked up right now? Is this like the worst possible time of the year to do this?
I would just give the office a call. We can help. One of the other big things that's really big, you get an energy credit for redoing windows, roofs, doors to make your house more energy efficient. They'll give you a $1,500 tax credit or up to 30% of what you spent for a tax credit. Many people just miss this. They don't tell somebody that they're upgrading their windows or doors, and in fact, my folks spent $4,500 and they didn't realize they can get a $1,500 tax credit.
So you might have upgraded just because the windows were old and drafty and you wanted new windows and just had done that anyway and not realized that you can get a tax credit for it.
That's right.
Okay. Now, some of these things, it did have to be done in the last tax year, correct?
Yeah. Yes,
okay,
it did.
so for folks that are planning ahead now, these are things that you might think about doing sometime this year.
Oh, yeah.
In order to get that credit if you missed out on it last year.
These are all those lovely little changes that happened. This is all going to change in 2013.
So take advantage now?
Oh, yeah.
Okay, very good. How about the free workshops?
The free workshops, we have one tonight in Carlsbad. It's at the Sheraton Spa and Resort. I'm sorry, I forgot the name of the chef, but he's a very special chef, award-winning chef, and he's going to provide dinner for everybody.
Point is, the food's going to be fabulous.
Oh yeah.
Okay.
And it starts at 6 o'clock. If you're interested in going, you want to call our office at 1-800-560-2611. Ask for Gina. She'll get you on the list. We have about 5 or 6 spots left.
Ooh, so it is filling up.
Mm-hmm.
But during the seminar, all the information that we just touched on here, you go into great detail and loads more.
Oh, yes. Can I go through one other thing? And I just saw this. It's really big. We have people that are working with companies. They are receiving company stock, and they're in the 401k.
Right.
And we've just had this happen where their provider said, hey, we'll roll it over to an IRA, no big deal. And most people think, oh, okay, great. But it was company stock. He got it at $10 a share. Now it's worth $12. Now he has 50,000 shares, so that's $600,000. That's great. But the problem is he could have took that money out of it when he leaves the company and utilized a tax code called net realized unrealized capital gain, and pay only $15,000 in taxes on removing $600,000 out of his 401k if he did it right.
So huge,
gigantic. You know what? I have people that have done that this year with $10,000 and saved them $2,500. So it's really important if you're selling a business, you're looking to retire, is to talk with somebody about that taxable situation.
Great. Steve Sexton, Sexton Advisory Group. Take advantage of the free seminar. Call the number on your screen there and get up to that, and give Steve a call if you have any questions. Great to see you.
Thanks, Mark. Good to see you, too.
Great stuff. I'm going to have to go over my notes during the break. For more information, you go to san diego6.com.